Hello. So I figured I'll create a short video and share with you three super easy tips that I have found has improved my psychology as a trader. Now, all of these things very mechanical, they're very physical things. They're not things that exist in our minds, but they help our minds as a byproduct. You can implement all of this stuff once, and once you've done it, you've got it for life. And the best thing, takes less than 10 minutes to apply all three of them. So let's get into it. Number one, terminal colors. So everything you see on my chart is the bare minimum that I need to see to help me make decisions. The problem is, as traders, we want to make our charts look really, really pretty. And when we have pretty charts, they act like a casino, these flashing lights, like an arcade machine. It's just constantly pulling our attention back to the charts. Now, being a full time trader for 6 years, I can tell you I make money over a big sample when I'm only executing in high probability areas, not when I'm getting drawn into all the noise and all the flashing colors to the sides. So, I want you to take a moment and consider what colors you're using on the chart. Certain colors are going to cause you to be more active and more reactive than other colors. There are certain colors that give us certain triggers. There are certain colors that we've attached certain emotions to. So I want you to take a moment and consider what it would look like if you were to take your charts, remove the things that don't help you, and change the colors to something that's less engaging. So I'm going to share with you what my personal terminal looks like. I have used this color scheme for over 3 years. I'll pull up an image of it on the screen now. And I've also included the color scheme. So if you want to copy it, you've got all the colors down to the side and what grades I use. Now, I know what you're thinking, Rich. How can you stare at this 8, 9, 10 hours a day? Well, the reality is I can't. I don't want to. It does absolutely nothing for me. The colors I've chosen on the charts, they don't trigger me in any possible way. And I only look at them enough to be objective about what I'm looking at. So give your psychology a break. If you're on a diet and you are constantly having to fight the urge to go to the cupboard and not eat that cream cake, eventually your willpower is going to run out. And that's what we're trying to achieve here. So, tip number one is going to be go to your terminal, change your colors to something that just makes trading boring. It dulls down your senses to a point where you can look at it and go, I can be objective. I know exactly what I'm looking for, and I really am not going to get caught up in this and over trade. So, very helpful tip that I found is make the charts as unappealing as possible. That way, I'm not too excited to be placing trades for no reason. Let me hop back onto the main screen and I'll share tip number two. So, for the second point, we all know what it's like to have an analysis, to know exactly what we're looking for in the market. And then that time comes to pull the trigger. And we can ask great qualifying questions. Is this a good trade? Yes. Is this a trade that meets my trading plan? Yes. We can simplify trading to a point where we just have to execute. Now, for the sake of this demonstration, this was actually a trade that was taken on stream, but for the sake of this demonstration, this is the analysis. My stop loss is going to go on the high. My entry is going to be on this lower black line, and I'm anticipating the market to come into one of these two lines and reject. Okay. So I've asked myself the good qualifying questions. This is a good valid trade. This is something I would be looking for within my trading plan. Okay. I don't know your trading plan, but I'm sure you understand what a good trade looks like within your plan. Let's say for this purpose, you have identified it and that trade looks like what you're seeing on the screen. Now, how many traders do this? And if you say none, absolutely not. We held a poll recently. 80% of traders admitted they do this. They get their entry. And as soon as the market fills their entry, they jump straight down to the 1 minute time frame and they start watching price move. Trading is hard enough as it is. Why would you make it more difficult by going down to a smaller time frame and constantly assessing price? If your trading plan tells you when a trade is triggered, much like this, we've come into our entry and the market has moved away. If your trading plan tells you that you need to move to a lower time frame to manage your trade, fair enough. If your trading plan says, hey, I have an analysis and my analysis says that my trade must hit my stop loss or it must head down towards my take profit. What on earth are you doing on the lower time frames? How on earth is this going to help you looking at this market moving up and down and up and down on a lower time frame? I know it because I do it. And then what I do is I end up making silly decisions based on how the market's moving. And I'll be like, oh no, look, the market's pulling back. Maybe I should just close this. Maybe I should move my stop down to break even, just like this, just in case, because I don't want to lose. So we've got to start to think about how we feel when we're in a trade. We become emotional. So very, very quickly, and I know this kind of stuff doesn't really resonate too well, but two components to the brain. For this example, you've got the front logical part of the brain and you've got the back part of the brain, which is very, very emotional. Now, when you get an adrenaline shock and when you're in a trade and you're seeing the trade move up and down into profit and into drawdown, you get an emotional reaction in the back of your mind. You have to deal with that emotional reaction before you can then go, what's the logical thing to do? Now, I don't know about you, but for myself, when I'm looking at the market on 1 minute charts like this, I'm going to get triggered and have so many more emotional reactions so much quicker than if I was to sit there and just be objective. Oh, wonder if I can just grab this. There we are. We'll put this back up here somewhere, wherever it was. If I was just to look at the trade like this and say, this is a valid trade according to my plan, the trade has come up, the trade has hit my entry, the trade is now active, my trading plan says it needs to be managed a certain way for me, it needs to go to the stop loss or take profit. When this trade becomes live, I'm going to go up and I'm going to zoom out. And that right there looks so much less threatening than the 1 minute charts. So give your psychology a break. We don't always have to be these super self aware traders of, I know exactly what I'm feeling. I know when I'm going to tilt. I know how I'm going to deal with my emotions. Sure, that stuff is great. That stuff really helps. That stuff goes into so many different aspects of life. But this is a physical change that you can do right now. You can change the colors on your chart so they are not sexy. You're going to not jump into random trades just because you are super sensitive to these colors and they're exciting you. Okay. So we're going to try and remove that off the table. Step number one. Step number two, you get in a trade, you immediately identify how you have to manage it and you zoom out. You jump onto the 4 hour and you just say, this here is not threatening. This here will move up and down at a tiny rate and it will not emotionally trigger you. It will not make you do anything that is going to fail your trading plan, or it's less likely to. So that's the goal with this one. Now, tip number 3, how many traders, when they get in a trade like this, immediately go up to the top of their terminal and they open their toolbox, and at the bottom, they allow it to display their floating profit and loss. I can tell you, I did this for a long time in my trading, and it does not help. I'm going to jump back down to the 1 minute, and I'm going to show you an example of this. So let's say we'll put the stop back on the high for this example, so we can get a little bit more accurate with it. We'll say about 13 pips is our stop loss. We'll jump down to the 1 minute. Now, the market has come in to our entry and has rejected and gone all the way down to this low, close to 1-to-1. So if we were risking $100 on this trade, we would be up on this low about $90. Market pullback, we were probably up 20, maybe $30, and then start to move. Maybe we're $40 or $50 in profit at the moment. Now, looking at the profit and loss tab down here, or on your phone or on your desktop is going to give you so much feedback. And we've got to think about how does that feedback affect us? If you're walking down the street and you see a £20 note or a $20 note on the pavement and you look around and no one's there, you're probably going to bend down and pick it up. Not saying what you do with it. I'm just going to say you are going to go, oh, £20, thank you. You're going to pick it up. When you're in trades, that's your default. And so if nobody's there to go, oi, that's my £20, no one's watching over your shoulder when you're trading. So when this trade goes down and in 3 minutes later, you're in $20 of profit or £20 of profit, what's to stop you going down to the little X and just clicking it once? It takes less than 1 second to go, oh, £20 and close that trade. If you were risking if you were risking $1,000 on this, you would be up $200 or $300 within 3 or 4 minutes. It takes less than 1 second to go close. It takes less time to close that trade than it takes to go, hang on, why would I close this trade? This is my analysis. I wanted the market to come to this price point and I wanted it to move lower. Hey, it's doing exactly what I hoped. And so we are wired to want to go and meddle with this trade. So when you realize that that's your default, and this will be true for 95% of traders, your default is going to be to try and grab easy money. The problem is if you close those trades prematurely, or if you close them trades too early, they're not going to pay for the losses when the losses come. And there's one thing you're guaranteed in trading is just losses. Trading is a probabilities game. And so we need to be objective. We need to identify our entry and exit criteria, and we need to do everything we can to make sure that we follow that. So the ways that we can do that is to lower that pressure, is to lower that dopamine, to lower that adrenaline, to lower the level of stimulation we have when we take trades. We do that by number one, changing the colors of the terminal. Make it boring. Number two, we zoom out on the trade and we don't stare at it on the 1 minute. And number three, we guard ourselves from the profit and loss tab at the bottom of the screen, because this is going to allow us to make quick, impulsive decisions that are normally not following our trading plan. And as traders, we want process over profit. Profit should be the byproduct of following your processes. So there you have it. 3 simple rules-based things that you can apply immediately that can help make trading less stimulating and help you follow your trading plan. So ask yourself this quick question before you run off. Are you in trading to be entertained, or are you trying to make money? If you're trying to make money, get all them flashing stuff off your chart. Focus on the process. Those 3 simple tips that I've shared with you will take you less than 10 minutes to apply. Hopefully you found this helpful. If you did, give us a thumbs up, chuck us a comment in there, and I'll do my best to get some videos out for you soon. Cheers.